Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's September 12th. This will be our chart lesson for the day, and looks like we got the um, data issue sorted out. Um, it's got something to do with the rollover dates in the AMP system. For those of you that are, most of you have probably figured this out and fixed it by now, but if you haven't, I've posted um, the steps that I took to fix mine. It seems to work for some other people as well. So I think it's the fix, at least the short term fix, temporary fix for the December contract. You may have to do it again in March. We'll just have to, or January rather. Will it be January? No, it'd be March contract. Will be the next contract. So um, anyway, there's your temporary fix. And if you want to see those steps, just go to yesterday's video and it's posted in the comments. So, pretty typical day today. Notice we had a channel working up. You get a break. We had a little channel working down. You get a break, a new low. Then we moved up to a new high, and we continue to make lower highs and or higher lows and higher highs here. So this is really, this is really kind of a upward bias in the end, but it's a range type day. So you notice how we're above the EMA, below, above, below, above. So you can trade this both ways, and you should trade it both ways. So otherwise, you're not going to get a lot of trades. But in the end, there was more of an upward bias to the day, and you just kind of had to follow these shorter term trend lines. There's probably you probably can find another trend line through here, like so. Um, let's see how it fits on the upper side. You really didn't need this, but I'll just show you this how, what's there just in case. It really didn't come in on the upper side except once, but it would have helped you with this trade here as well. Of course, that's after 2 o'clock, so maybe it wouldn't have helped you. But anyway, it's there. There's a trend line right along here. You really didn't need it. It doesn't really help you a whole lot. All you needed were these shorter term trends, and generally that's what you're going to use on range type days, and I'd specify this as a range day. So anyway, let's talk about the trades. I'm going to move through them relatively quickly today. There's not a whole lot of them, and wrap it up so I can get out of here at a decent hour today. But anyway, we're trending up here. Um, you get this trend line off the upper side and you drag it down, and of course you get that bounce right there. Um, it's just a first entry, and of course you got this trend line working down, so you got to question that one. This is really your signal bar anyway, so you don't want to be taking that. You get a second entry here. Notice how um, it opens up, it trades down, then turns and goes back out. Um, you could either put a stop right above that, but that's getting awfully close to those highs. So what I recommend doing, if you didn't let it break higher and drop a limit order in and get filled, that you wait on this next trade, and when it turns down and you get that reversal, that failed second entry short, basically, this is not really a reversal pattern, but a failed second entry short. It's more of a continuation pattern. Just go long right there on a stop, or let it break higher and maybe try to get a limit order in there. But I wouldn't, I might use a limit order on this entry, but on this one, I'm probably going to put a stop there because this is all bouncing off the trend line. Failed second entry short. It's a continuation pattern. If you try to get too conservative, you'll miss out. And you can see this was a great move. Um, a lot of times traders want to see the prices try to go lower twice and fail before they jump on to go in the other direction. And that's basically what happened here. Two failures right off the trend line, key entry point. Um, then we move up to a new high. We turn down right off the upper side, so now we're probably headed to the lower side. Again, this is your signal bar, and you definitely don't want to go long here. This is an inside nice bar. This is tempting. It was real tempting to maybe want to enter here, but I'll be honest with you, you wouldn't have had much opportunity to enter here because it jumped across really quick. Your chart might be different though. So, and you just had to be a little concerned. You did get a close outside here. It's very, it's not a convincing close, but it's enough that, there ought to be a question mark. And since the only way you could enter this would be on the next bar on an inside, I'd probably recommend skipping that. I wouldn't be ready to go short yet, even though that's a failed second entry long. And you could have gone short, and it would have worked. I just don't think you want to risk that yet. It does confirm the trend line as well, but it could have just been coming back to fill that gap, and it could have gone higher from there. So, but when it pushes on through the EMA and comes back to the trend line, and you can see there's a little two-legged move in there. You move up, a little correction, second leg up, nice bearish reversal bar. I like going short there, and you got room to get out. This one's tempting because it is a double test of that level there, but that's not a clear level. I probably could make that one green. But the fact that it's going short right into that double bottom, I just think you're better off to skip that one and wait and see what it does from there. I'll go ahead and mark it green, but I'm not crazy about it. I think it's pretty aggressive to go short there. But when it pushes down and comes back and makes a lower high and gives you a big bearish reversal type bar right there inside the key entry point, the confluence between the EMA and the trend line, I like going short there. And then, of course, you get a close outside here, and now you got one leg down, a correction, a second leg down. And so when it comes back here, even though there's another little, this is actually a repeat pattern, almost exactly like this one. Notice the move up, a little inside correction, and a second move up, and then it breaks higher and turns and goes down. But you've already got a close outside in two legs, so I'm a little leery of this one, but there's still some reasons to consider it. So I'm going to leave it. I'm going to make it green, or I did make it green. I'll leave it green. And then, so now you've had a close outside, three legs down, and then watch what happens. You get a first entry, you push through the EMA, and you get a second entry, and it fails right off a possible trend line. And so that's a failed second entry short. It's not a great signal bar, but you don't need one there because that's your reversal pattern, and that's what they do. They trap people, and you want to take advantage of that. So just go long when it breaks higher there. And it takes it a minute, but it works on up, and then it comes back here and just bounces, gives you a nice, it actually looks like there's a little double top, and once again, they fool everybody and they trap you in, and when it breaks lower below that big bearish bar and turns and goes back up, I like going long there, right off the key entry point again. Confluence there with the EMA as well. Nice bullish bar. What you might do is let that break higher and maybe come back a tick or so and get a little better entry. But again, you might get left out doing that. So I prefer just to use a buy stop right there. And then this is starting to look like a fairly strong trend here. Notice how we're just steadily climbing up the upper side, and it's not turning back down, but eventually it does. It turns back down. And but notice the main picture here, the big picture, is that you got this trend, you get a break, and now you've moved up and you get a new high. So what may happen here? You got to look for, we may just go sideways, but you're probably going to be sideways to the downside. And so now you got a trend working down. Notice that there's a little double leg in there, and then another attempt to come back, and you draw that trend line off the lows and drag it over, and it turns right there. It actually goes higher and traps people and goes right out the other side all in one bar. I like that one. Again, you may let it break lower and drop a limit order, but you could just drop a sell stop right there, and it still would have worked. You would have had to ride out this little pullback, but it would have still worked. But that's such a big bar. I really think that you need to let it break lower, and instead of waiting on it to close, just go ahead and drop your limit order in there and see if you could get filled. But if not, it would have come back, and you would have got filled all the way back to this level right here before it pushed on down. And if you'd have done that, you'd have probably been all out into one move, and you wouldn't have had to wait on this continued move down to the new low here after the break or the close outside the trend line. So, and that got you into the 2 o'clock hour. And I didn't mark anything after that because I don't think you want to be trading after that. So, not a bad day at all. Not a lot of entries. It's just more of a typical day. But the price action played out really well on all these short-term ones. This one was a little questionable because these breaks are so minor. But once you get a second one that closes outside, you got to consider that, hey, that's probably a legitimate close outside the trend line. And of course, you get the close outside here, and look what it does. It moves up to another new high. You get the close outside this one, move to a new low. So everything was really working price action wise if you read it right and drew your trend lines right. So, and this is a little bit sideways action here too, and that's another reason I really don't. It really just went sideways here. Let me show you how that looks, and that's another reason to kind of stay clear of all that. Now this could be treated as the failed break lower, but it's not a very good signal bar either. And again, it's after 2 o'clock. If it was a really nice signal bar, I might say, hey, you know, it's just barely after 2. You might take that one, but under the circumstances, I say skip it. So, but that's what I saw today. And again, I'm not going to drag this one out today. Pretty basic, kind of a sideways with a slight upward bias range type day. So, anyway, again, if you're still having problems with your data, go to yesterday's video and look in the comments, and you'll see a fix. I'm assuming everybody's probably already seen that and got their problem worked out by this point. So there's nothing worse than trying to trade with data and you're questioning it, because it can be it makes you question everything you do. So at least it does me. It messes with it. You don't want that messing with your head. You want to know that your data is accurate. I talked about data yesterday, so I'm not going to get into that again, but you want to know your data is accurate. So anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.